Hello, welcome back. This is Seewing, and today I'm going over the Redfin report dated 3rd of June. As of the date of this recording, I'm going to go over the updated mortgage rates, the sales pending, active listings, and new listings. And also, I'm going to give you my own analysis of what's going on currently and for the rest of this year, and even a several year forward projection. All right. So anyway, so without further ado, let me share you my screen first. I'm going to go over the mortgage news daily because it's critical. The associated with the mortgage rate volatility. So again, today's rate on mortgage news daily is 30-year fixed rate for people who have excellent credit up to 6.9%, almost 7%. And for those who are using a VA loan is 6.55%. And finally, the first-time home buyers, FHA, 3.5% down payment. Primary home buyers, their rates are approximately 6.55%. So yes, the mortgage rate is very elevated. And so let me share with you what's going on this past week, actually. According to Mortgage News Daily, a week and a half ago, the rate were beyond 7.12%, 25th of May. And then it went all the way up to 7.14%. Actually, 7.1% rate last week was the highest since the last November. Just share that with you. So it's pretty daunting, pretty frustrating situation, especially for people who are on the borderline of trying to buy a primary home. And then, however, these past few days, the rate has dropped below 7%. As you can see, 6.95, 6.88, 6.85, and today slightly back up to 6.90. Again, were people with very good credit. Now, if you compare year over year, last June 2022, the mortgage rate was 5.43%. So year over year, the rate change was 1.47 basis point, which is pretty substantial. Now, let's go over the mortgage rate situation. Last year, around June, again, the mortgage rate was 5.43%. We are still seeing a lot of people that are trying to complete the transactions. We're seeing the market and housing frenzy were pretty robust because the mortgage rate has been increasing ever since the beginning of 2022 up until 6 months into it. June still at 5.43%. So this is the last batch of potential home buyers that want to lock in there at the rate year over year last June. So then actually next few months, once I update you on more Redfin videos and other website related videos, you can hear me say year over year. For example, by this October 2023, when I do my video presentation, the last year's rate, for example, these are like 7%. For example, if I record my video this coming October, since October 2022, the mortgage rate was 7.13%. So somewhere around there. And if this October of 2023, if the mortgage rate is 6.5%, I'm going to say year over year. That means this year, 2023, year over year, October compared to October 2022, where the mortgage rate was higher than this year projected. Like I'm using this assumption. Then we see some very interesting data. So until then, you hear me not only from my channel, other channels, you hear other people saying year over year, compared to 2021, compared to 2022. Look, 2021 and the first half of 2022 was an anomaly. It's a once in a lifetime housing market boom. So it's very hard to compare apple to apple. It's just what I'm trying to say is toward the back end this year, when I produce the year over year numbers, we can see some like an apple to apple comparison. We can see some normal market, hopefully normal market. As long as the mortgage rate hovers between 6 and 7% this year, or I expect to see stabilization, flattening of the market. very little major changes. Anything could happen. Of course, the employment situation could impact what's going on for the rest of this year, and the inflation, recession, all those fear-based significant events could impact the housing market. One, no, could swing one way or the other. But I wouldn't use this fear-based type of economic events that can distract from your goals of either buying a primary home or buy a investment property. So also you have to focus on buying long-term, buy and hold. You're going to be rewarded. And that's history. And so if you follow history, that's the anticipation. Does that make sense? So yeah, again, the mortgage rate is still very elevated, but this is the new normal. This is the new reality. Us consumers out there, we have to deal with it and go over your specific goals and objectives. If you can afford to buy a home, buy, because the home affordability is getting worse and worse. I will share that with you. The people at still continuing to wait. They could be subject to higher mortgage payments, higher home prices, potentially, and that will continue to lock a lot of people out of the home purchase market, and a lot of people, more and more people, going to be sitting on the sidelines, and many more people. This is the renters nation. More people are renting nowadays than ever before, based on my survey, based on my research. So it's a very challenging market. All right, so let's go back to the Redfin article dated, what's the date? Date 1 June, a couple of days ago. All right, as I stated, the first paragraph of the Redfin article stating that the mortgage rate has hit a 7-month high. So yeah, 7-month high, and limited listings of sidelining home buyers. That's right. And conversely, the historic low inventory of supply of homes is also putting upward pressure of home prices. And we have seen year to date, right now it's June already. Wow, half the year is already gone. It's pretty shocking. The first 6 months of this year, I will show you momentarily, home prices all across the nation has increased anywhere from 5 to 7%. It all depends, but as I reiterated many times, although when I go and read an article, I always, I give you some generic national real estate market, but you really need to know there's no such thing as a national real estate market. Real estate market is very hyper local, down to the neighborhood, down to the street. So wherever you're located, wherever you listen to my video, I'm sure your local real estate market conditions are very unique. And so please comment below about what's going on with you, where you're watching this video, what's going on with your local market. I'm curious to hear, because yeah, anyway, so that's my hope. So let's get back to this Redfin article. You could keep hearing, because of the median price of homes is almost $400,000 nationwide. So with the 6.9% mortgage rate, so your monthly mortgage has hit another record high of $2,651, up by more than $330 from a year ago. Like I stated to you, a year ago, the mortgage rate was 5.43%. Today, 6.9%. As a result, the higher rate, the mortgage payment is $350 higher this year than last year. So therefore, it will continue to put more prospective home buyers on the sidelines. Again, lack of homes. Let's continue. Lack of homes on the market is propping up prices. That's right. Prices not going down. For those of you that are hoping for a housing market crash, you're going to be waiting for a long time to come. So you will continue to be priced out of the home market. But the elevated mortgage rate and the increasing home prices due to lack of inventory and pent-up demand will make prices continue to go up. And that's the challenge that you're facing. So the lack of homes, propping up prices, with the median US sales price down a mere 1.9% year over year, which is the smallest decline in 2 months. All right, let's go over the leading indicators of home buying activity. The seasonally adjusted Redfin home buyer demand index was down 4% from a week earlier. To be expected, there'll be elevated mortgage rates increases. And mortgage application was decreased by 3%. So these data are very obvious. The higher the mortgage rate go, the demand is decreases as a result. And of course, I'm going to share with you the continual reduction of the listings, after listings, and pending sales. All those will result in continuing to have a very extreme historic low inventory. All right, let's go over the what else is going on. Again, the medium wholesale price at 377K, down less than 2% from a year ago. Home prices declined in 30 metros, tracked by Redfin, and of course, Austin down by 16.4%. Oakland, the Bay Area where I live, down by double digit. Also, Las Vegas, almost double digit down. San Francisco and Sacramento. So this trend has been continuing for the past year or so in the western region of the cyclical market, the western region of the US. But on the other hand, many areas of the country has continued to be very stable, and many areas, especially in the Midwest, and many areas, the South and Southeast, you have home prices continue to increase. So just so you know, once again, real estate is very local. It is down very even hyper local. So as you see, Miami is still doing well. Fort Lauderdale, you can make the argument the whole state of Florida is doing very well as a result of the job population growth and migration patterns, design low cost of living, low cost of homes still, especially compared to the Western region. So median price is creeping up to almost 400K. And once again, you know what? I say record high at 2651 mortgage payment. Currently record high, most likely. Listen, if the mortgage rate can stay at the high sixes, like 6.7, 6.8 for the next 4 months, and the level of inventory continue to be extremely low, homeowners, mortgage holders are locked in their low historical rate of 3% or whatever, and they're not going to sell their homes. They're not motivated to sell a home when they lock in a 30-year fixed rate mortgage 3%, to buy a home for 7%. Essentially double the mortgage payment. So we expect to see historic low inventory can continue. And if that's the case, we still have sufficient demand out there, believe it or not, even at almost 7% rate. And home prices will continue to increase. So the mortgage payment, you just saw the record high. You could hear what not only me, but other YouTubers can have in the next few months. We'll give you this updated report is going to say record monthly mortgage prices will continue month over month. And if it is $2,500 or whatever this week or this month, if it's 2651, that is, it'll be higher. It'll be higher moving forward for the rest of this year. It'll be higher than 2651. So you can hear the word record high mortgage payments. All right. So very challenging to say the least. And of course, when pending sales continue to fall quite dramatically, triple digit in many Western regions, Seattle, San Diego, and Sacramento. When we see pending home sales fail because there are not many transactions. Why there are not many closing transactions? Because there are not enough homes available for sale. That is the very disturbing trend, which will affect the supply of inventory, and therefore it will continue to create stability in the housing market. New listings, same thing, not just pending home sales. New listings has declined in all metros that Redfin analyzed. Look at Vegas, declined by a whopping 42% year over years. Oakland, almost 40%, Seattle, San Diego, Phoenix. So I have to say, if this kind of new listings declining by triple to quadruple digit, and pending sales will continue to decline month over month this year, a double digit. Think about it. Later this year, I will go over that briefly today. Right now, the supply of the inventory is 2.7% nationwide. This kind of trend continues. The data I just shared with you later this year, 3, 4, 5, 6, 7 months later, the supply of inventory could be like 2.7%, 2.7 month inventory could be down to 2% and 2 months, even less than 2 months inventory, which is beyond historic. This is prehistoric. This is Cretaceous time. This is caveman time. Historical inventory forms. So this is, yeah, pretty soon later this year, do not be surprised when I come back with my video. I'm going to say no homes for sale nationwide. No homes. So people will be stuck. Okay. So very interesting market to say the least. So new listings. Okay. I'll just mention now. Okay. Monthly supply, which is the most critical metrics, I believe right now was 2.7. By the way, 5 to 6 months supply of inventory is balanced, healthy market. 5 to 6 months of inventory. Right now, we're seeing we start low 2.7% a month of inventory, which is higher than last year, right? 2022. But last year was a very robust year. But last year was 2.1 a month of inventory. And 2021, at the 2021, of course, the historic real estate boom, the month of inventory was around a little bit more than 1 month of inventory. So we might fall the worst case scenario, if the pending sales and active listings and new listings continue to stumble the trend that we have seen in the past 9 to 12 months, the supply of inventory. If the mortgage rate stays elevated, like the mid sixes or high sixes for the rest of this year, I'm projecting, I'm guessing, I don't have a crystal ball by no means, but my opinion is that the supply of inventory could go below 2 months. All right. If the supply is going to be beyond 2 months, no homes for sale. So people will really still have more buyers. So we'll see buying frenzy even at maybe 6%, even a 6% mortgage rate. If we hit 6% mortgage rate this year or even beginning of next year, we will see pent up demand even greater and supply of inventory will extremely historic low because of demand is higher than supply. With economics 101, that means home prices are higher. That means you see multiple offers and bidding war situation, which I don't even want that. Actually, I might want to talk more about that maybe in the next video. I do not want the mortgage rate to go down below 6%. If that's the case, we will with many more buyers can get off the sideline. They're going to want to buy houses. Since the inventory is so low, you're going to see multiple offers. You're going to see bidding war because it's just crazy. So we don't want to see another 2021. 2021, you have 3% mortgage rate, you have no inventory, and homes will bid up by 20, 30, 40% over asking. It's an unhealthy market. So personally, I want the mortgage rate to be around 6% or a little bit higher to create more stability in the market. We don't want any double, triple, quadruple digit home price appreciation like we saw in 2021 and the beginning of 2022. Does that make sense? If you please comment below. I would love to hear your thoughts because, because I'm sure a lot of you have different thoughts, different opinions. I would love to hear from them. I'll be more than happy to respond to your comments. All right, let's finalize this video. Median price, so the median price has been increasing since February of this year. The spring market 2023 is very robust. Bidding wars and multiple offers situations nationwide, although this is local, nationwide, the home prices have increased almost to 10%. Very interesting. As you can see, the last 2 or 3 years of home price increase has been very dramatic and will continue to be pretty robust. Median asking price, pretty similar this year from last year. And home buyers housing payment has increased by more than 15% year over year. As you can see, record high mortgage payment, 2651 as of May 28, 2023. Look at this. Look at back in 2020. right at the onset of the pandemic. At that time, the mortgage payment were a little bit less than during June. The mortgage payment a little bit less than 1,500, right? Now the mortgage payment is 2,651. We're talking. I don't have my calculator in front of me. We're talking almost like 80% increase in mortgage payment in just 2.5 years. Think about it. For people that were unable to buy a home or not willing to buy a home back in 2020, when the median price of homes are a lot cheaper, when the median price of home were like the mid 200,000, now the median price of home is almost 400,000. And then wait 2.5 years to buy a home. The median price of $200,000 homes right now is 400,000, and the mortgage payment back then was less than 1,500. Now is 26 whatever, 2651. I mean, this data clearly indicates that people who have the wherewithal to buy a home 2 or 3 years ago, they're sitting pretty. People that wanted to wait until the market crashed before they buy, they could be waiting for a long time because the affordability is going to get worse or continue to wait on the sideline. That's the reality. So what face reality? Okay, then conclude this pending sales year over year. Again, minus 17. Not that many sales transaction. Not that many homes are available. Purchase. New listings, another very disturbing trend. New listings is minus 23% year over year. Right now, May 28th, there were 90,000 transactions of new listings. Now look at last year over year. There are more than almost 110,000, 120,000 active new listings year over year. So active listings, again, normally the spring housing market, active listings usually go uptick like this on a historical basis. For spring is the most activity which is watching. But instead, this year, the trend has been decreasing, which is very abnormal. Compared to last year, active listings is less right now compared to 2020. It's a lot less than back then. So this is a very disturbing trend again. And supply of homes right now is down to 247. I expect it's going to continue to go down gradually as long as the mortgage rate or around the mid sixes. Pending sales, again, is 35% lower than previous year and way lower than the pre-pandemic levels. So 1/3 of the homes are sold above this price, which is good. It's getting healthier, and we got less price drops because home sellers, they know how to price their homes for sale. They have not gone crazy. I think that's pretty much it. So the takeaway is home affordability is going to get worse. My recap is also simply, if you cannot afford it, you cannot afford it. Nothing you can do about it. Something you can do about it. Make more money, have a higher income, get another job, get your salary increases. You can afford today's median price of 400,000. If you cannot afford, if you're simply cannot afford to qualify the mortgage, there's nothing you can do. Almost everything. But for those people that qualify to buy a primary home based on today's mortgage rate, based on today's price, take a plunge. If you have a long-term buy and hold situation, you can afford it, you have good cash reserve, you have good job stability, then also saying you should not buy a home right now. You always refinance your loan down the road. Okay, so those people that want to wait in the sideline, wait until the mortgage rate gets 6%, or wait until the home price drops by 20%, so you can afford to buy a home. You might be waiting for a long time. But the trends are not increasing home prices or not your friends, they're your enemy. So people that continue to wait, they're going to be left behind in the housing market because you may be able to borderline afford the mortgage now, but you may not be able to afford it later on due to the rising home prices and the demand greater than supply. and all that. Anyway, that's all I have to say. And right, as I conclude this, please, if you see a lot of values in this video, please smash the like button and subscribe to my YouTube channel. I need a lot more subscribers than I've been getting. Mainly because of the fact that I'm being very transparent, very realistic in the way I report truthful, accurate data. I'm not a YouTuber who do submit crash, porn, highlights, clickbait type of situation. So I can't go there. I just want to educate as many people in the YouTube channel as possible so they can make full decisions to buy primary home and to buy rental properties. This is my forte, by the way. I help people, my business model is I help people to buy rental properties, turnkey rental properties. So actually, not only, you should also visit my website below, drop your email into the form. So become a free member of our real estate organization. By becoming a free member on your email on a weekly basis, you will receive free real estate information, investment real estate, turnkey property, where to buy, what areas to buy, more free, great free education. And you can't get anywhere else in the country, any organization for that matter. So basically, what we do as a real estate investment club, we help investors invest out of state. This is our specialty. We connect you with experienced network real estate agents we have within our umbrella. And so invest in turnkey cash flow properties in the hottest market in the country, especially West and South and Southeast. And we can help especially newbies out there, beginning real estate investor that want to invest, but know how to do it. You come to our organization, you will systematically learn, educate, get informed, and take action to become a great real estate investor that I know you. All right. That's it. Thank you so much for listening to the Seewing. I will see you on another video very soon. Thank you so much. Have a nice day. Bye-bye.